Hello and welcome to the Capital Conversation with me, Michael Hayman. Now, I'm delighted to be joined by two guests today who are working together on one of the big issues of our time, our relationship with money. Salary Finance is the fintech platform that works to improve the outlook for the UK's and USA's financially insecure, and its co-founder and CEO is Asesh Sarkar, and alongside him is Nigel Wilson, the CEO of the FTSE 100 financial services firm Legal & General, which this summer became the first UK investment house to manage £1 trillion of assets. Welcome to the show, guys. Nigel, I'll start with you about how you're using some of that £1 trillion because you invested in Salary Finance early on. Some saw it as the social purpose cul-de-sac. You saw it as the fast lane to success. Tell us how it worked out.
I think we try to be an economically and socially useful business, and we're looking for brilliant young entrepreneurs who want to make a difference, backed by strong partners. And Salary Finance ticks all those boxes. Great people doing the right thing for the right reasons, delivering the right outcome. And
this is one of quite a portfolio of startups that you're investing in.
Yes, we have about 280 different ones. Clearly, this one is one of the much more advanced ones. But the world, in fact, the UK is awash with entrepreneurs, brilliant ideas. They themselves know how to get access to finance to really make things happen and happen at scale.
And a lot of people will be wondering, why does a very large business involved in financial services invest in startups? What's the rationale?
If you take a very long-term view, DC pensions, that defined contribution pensions, will be investing in startups, we think, in 2020. So we've taken this very long-term view that this is a very exciting asset class. And to a certain extent, it's been an asset class which has been the privilege of the rich, ironically, but we want to make it available to all through DC pensions. This is one of the first steps.
So pensions of the future?
These are the pensions of the future, because actually they're 20 or 30-year investments.
Asesh, that's quite a responsibility on your shoulders, the fortunes of the future. Now, tell us a little bit about Salary Finance. Frame the business for us.
Yeah, very much, absolutely. So we are a financial wellness platform, so we work with employers, typically large employers who work with about 150 companies in the UK. They employ about 1.2 million employees, and then we offer a series of financial wellness benefits for their employees. So that includes savings directly from their salaries, low interest loans, advances under pay, but also lots of financial education as well.
I mean, and when you're working with a big company like Legal & General, I mean, what's the difference between having a large corporate investor and, say, a private equity investment or venture capital or angels or other sorts of sort of investment types?
Yeah, absolutely. So for us, right from day one, a big part of our business has been aligning commercial outcomes with social outcomes. So for us, it was important to have an investor that saw the same. And so, we never talk about, what is our path to exit, how much money we're going to make. It's very much around, what is economically useful and what will deliver the social outcomes we want. And so within L&G, we kind of very much see that same philosophy. And so it just makes the process a lot easier. Also, many of our clients are big clients. So 15% of the FTSE 100 are clients of ours. They get a lot of comfort by us being backed by an institution like Legal & General in terms of our longevity.
Nigel, does working with startups, does that change the culture within Legal & General at all? I mean, does that make any difference to that? I mean, is that part of the idea?
I think it's part of the idea because, many years ago, a lot of the FTSE companies were startups themselves. And
sure.
we obviously, 100% of the FTSE are clients of ours. And so actually we're trying to figure out how we can engage them more in useful activities like this. So it's a win-win for us because we're engaging with our client base, and our colleagues, or my colleagues, get very excited about working with these types of businesses. And it's a door that leads to doors. Actually, as we said, Salary Finance was on a journey here. Now it's a bigger journey, both geographically and by product. And by having a strong financial backer like Legal & General, a great brand name like Legal & General, and access to a huge customer base from Legal & General, it's a
big piece of firepower, I guess,
absolutely.
for the business. And also because you need it. I mean, you've got a big issue, financial inclusion. I mean, for people that aren't in the know and using the lingo, I mean, what does financial inclusion mean?
Yeah, sure. Probably points to the founding story of Salary Finance, which is, I have two children. We have a nanny, and I used to work in the city, and so it seemed very strange to me that I would simply go to a bank and get a loan for 5% interest, yet my children's nanny could not access mainstream finance, and so her next best options were either very high interest credit cards or payday loans. And so it seemed very strange that in society, some people can access finance at great rates, other people can't. And then I guess the issue is if you can't access finance at a reasonable rate, a high proportion of your income goes off paying interest. That leaves you financially vulnerable and get into very difficult cycles to break. So I guess financial inclusion is all about the access different people have to finance and how that's quite inequitable.
And how many people are facing that challenge? I mean, if we
Absolutely.
frame the
So
marketplace.
very simplistically, if you looked at working people in the UK today, 40% of them have less than £100 in savings, so they're essentially very vulnerable. And so if a shock of any type comes up, then it's pretty challenging for them. The mainstream banks typically decline about 70% of applications for loans. They just don't meet their credit criteria. And so if you take 40% of people of having no savings, and if you take 70% unable to access mainstream finance, it leaves a pretty big portion of society.
And presumably, if you're looking at a marketplace like this, a lot of these people are going to be in a fragile state of mind. They're going to feel very insecure. In terms of actually the road to sort of getting involved and helping people in that way, I mean, what have you observed in terms of the best ways of doing it, Nigel?
Well, I think this is a great way of doing it, and because we have a research called Deadline to the Red Line, which is actually quite frightening when you read it. It's just how many people live under intense monetary stress, and it's and mental health as a consequence. Is a real issue, and the financial education that these people had is virtually zero. And wrapping all this together in this one solution is really a very positive step forward, both for firms like ours, but also for the FTSE 100 firms, smaller firms, but for individuals themselves. It's a win-win-win all round.
Do you get a sense that the UK at the moment is not a particularly happy place because of issues like this?
It could be happier. I mean, I think across the UK, there's lots of people who are doing very well. There's lots of other people who are not doing so well, and we haven't done enough in the last 20 or 30 years for the not so wells. And this is a way to help them keep going and actually see a light at the end of the tunnel.
And the figures, I was reading £6,012 is when the alarm bells start ringing in most people's mind, that they think, they realise they may well have quite a big problem.
Absolutely.
In terms of the education piece that goes alongside your business, I mean, how do you create awareness about your own financial health? How do you empower people to take control of that?
Absolutely. So we do two things. One is we combine great products with great engaging education, and so on the education side, in general, lots of content is quite difficult for people to really engage with and understand. And so what we do is we film video box sets. So a box set, the Netflix culture is very big. Lots of people like to engage with it. And so, we have, season 1 on building your credit score, season 2 again, a property ladder. And so we try to create content which is a bit more engaging. But we also very much marry it into our product journey. And so for us, kind of frictionless journeys are very important. So if you're saving directly from your pay, then you're more likely to do that habit. And then when, with a lot of people that save with us, 4 or 5 months later, they forgot they've set it up, but suddenly now have, a few £100s in savings. That's a good time for us to, send a video to them around what they might now think about next.
I mean, a lot of people would say, Nigel, that actually you shouldn't really need a business like this, is that it's, it's a reflection of short-termism, of unfairness, of inequity. I mean, do you sort of feel that in some respects, the very fact that salary finance exists reflects the failure to address bigger issues about the equitable, sharing of wealth?
There's certainly some truth in that, and that's what we've really seen in the last 20 or 30 years, and people have outlived them or spent more than they've earned, and have had a lifestyle which is above it. And we've not done enough for low pay in Britain for a long period of time. And that's a much bigger question about how we've underinvested in the economy for 30 or 40 years. And as a consequence of that, there's lots of market failures. This is addressing a market failure, but needs to be addressed. It's an urgent issue which needs to be addressed.
I mean, if I could just put it to you that, one of the aides to Alexandria Ocasio-Cortez, he described Dan Rifle. He described every billionaire as a policy failure. I mean, do you see that actually there's a bigger problem here that surrounds the business to do with wealth?
No, I think that's just envy more than anything else. I think many of the billionaires I've met and are actually good people and are often some of the most generous people of giving their wealth away. They accumulate wealth with the objective of giving it away in later life, and they're not sitting there hoarding their money. They're trying to do the great thing.
Do you pick up on that, Asesh? Do you reflect that in your experience, that actually bosses want to get better, they want to get involved in things like this, they want to address that? And if so, what are people doing about it in your experience?
I see, very much so. So most of the people that chose to use salary finance in the early days, where there wasn't huge amounts of track record were taking a risk, and they were happy to do that. Quite often we engage at CEO level, and they were happy to do that because they could see life was difficult for their employees, but they could not see solutions to help support them. And so when we came along, although at the time, today it's much more proven, but at the time it was something unknown, they're very much happy to embrace it. And as we've developed, we see employers looking to do new and innovative things to help their employees. So at the moment, for example, we're working with a large company. Their chief executive is putting £10 million of his own money to help his employees get onto the mortgage ladder with our support. And so we certainly see lots of innovation, and for us it's taking great ideas in different parts of people's financial lives and really trying to scale them.
Right, much more to come, but we're going to go to a break now, and when we come back, we're going to look at the future of fintech and how to prosper with purpose. We'll see you soon. Welcome back. My guests today are Asesh Sarkar of Salary Finance and Legal & General's Nigel Wilson. Now, before the break, Nigel, we were talking a little bit about, I guess, the responsibilities of the powerful. You've spoken within your business about naming and faming businesses that make that social contribution, both, I guess, the investments you're making and more generally the contribution you make. Take that up for us for those that say the business of business, business and profits, and then do what you can with that money. For those that actually are saying, actually, we've got to be beyond profit, we've got to do things directly in a much more active way.
No, I think there's a huge number of businesses moving towards that now, and there's very, very rarely do I meet a CEO in my office who says, that's not what we want to do, we're just into good old-fashioned shareholder maximisation. There's definitely a sea change going on right across the world on this.
But I mean, it's still the case that when you speak about chief executives like yourself or Paul Pullman at Unilever, is that they do still feel like they are the exceptions to the rule. I mean, frame it for us. I mean, you're doing so many things, from investing in houses. I mean,
sure, yeah, because there's so much to do. I think we've had 30 or 40 years of market failure, and whether it's later life living accommodation, which is we less than 1% of our housing stock is built for people over the age of 55, whereas other countries it's between 5 and 10%. Affordable housing, massive undersupply over the last 20 or 30 years. Homes for the housing. We're doing all of these, not just in certain cities. Pretty much every city in the UK has that issue. London, Oxford, Cambridge, Edinburgh, Glasgow, Leeds, Manchester.
But when you look at your fellow FTSE 100 chief execs, chairman's boards, and you look at how they address these issues, I guess the social contribution of business, do enough of them see the world in the same way that you do?
No, I think they may see the world partially similar to me, but actually the difficulty is to act. Many CEOs have a very short lifespan, and unfortunately I've been in the business 10 years and been in charge.
So what's the key to survival?
No, I think it is doing these things as well, because by having a purpose-led organisation, the people who work for you are massively engaged in trying to do the right things, and therefore you get a totally engaged workforce. You build a track record, and therefore lots of economic agents across the UK are happy to engage with you. And often to get these things done, like the Oxford deal or deals in Newcastle or Manchester or Cardiff, you need an unusual group of people to actually work together.
So you get a better business.
We get a better business. We get a collaborative team working together, and we get great social outcomes at the same time. So we can transform cities like Cardiff and make a huge difference to cities like Oxford. Right.
Let's move on to fintech, because actually, a lot of what your play is, a lot of your sort of interest, I guess, is being a fintech business. I mean, for those that are watching it and saying, what is fintech? First of all, just give us a definition of terms.
Yeah, sure. So I guess traditionally financial services has been dominated by a few very large organisations. Today,
I think he's talking about us.
Today, with the help of technology, supported regulation, different forms of capital, actually new and upcoming companies with different views and different ideas can actually scale.
But to Nigel's point, you're there to disrupt the model, are you? I mean, is that the job of fintech?
Is that the job of fintech? So I think within any mainstream large model, there are material sections which are not well catered for. And I think in society today, there are material parts of society which are not catered for by financial services.
I think that's a yes.
I'm going to say that. That's definitely a yes. And we see disruption as a privilege and a responsibility. and self-disruption we have to do because there's all these, very clever, innovative companies out there who will disrupt us if we don't act first.
Yeah, I mean, but when you look at the technology sector, I mean, over the last couple of years, we've seen the rise of what's being called the techlash, where certainly those kind of consumer platforms like Facebook and others have received, after having had hitherto fairly sort of, you could argue easy rides, are suddenly finding themselves very much in the public glare.
Yes.
Do you think fintech could have the same issues itself as a sector that's seeking to change the way we bank, change the way we insure? I mean, to what degree are they carrying consumers along with them?
Yeah, sure. So I think you go through different stages. So one of the benefits of fintech in the early days is you have no legacy. So I've worked in kind of many banks as a consultant, and they're generally good people, generally smart, but there's huge amounts of legacy before you can really be innovative. And when you start as a fintech, actually you have no legacy, and it's much easier to get ideas off the ground. As you scale, you do need many of the disciplines that big organizations have. And I think one of the things which we'll see how fintech plays out is whether it learns that at the right point and does build in the right controls, the right disciplines. Otherwise, you have very sensitive data, you have important things in people's life, there's lots of regulation. So I guess it's just when you take that responsibility, and do you do it when it's too big and you're catching up, or whether you do that as part of the course.
And when you're a big financial services player, I mean, is fintech still a bit of a novelty, or is this the future in the way it will disrupt the market, do you think?
It's interesting. I mean, we were originally a fintech in 1836. We were a peer-to-peer
What was that,
insurance.
old fintech?
No, it was absolutely, leading-edge fintech. That's why we became successful with the Babbage difference engine.
With coal?
No, seriously, some of the first computers were developed for the actuarial service and life insurance in the 1840s, and we were at the leading edge of all of that as legal in general, and in peer-to-peer.
And has that been the key to success, do you think, over the years?
I think the view we have is the startup, scale-ups, and grown-up businesses. We're definitely in the grown-up. Salary finance is definitely in the startup. What we're brilliant at as a firm is not being the scale-up businesses, which is what Salary Finance and Blenheim Chalcott and others are fantastic at. We're great at scaling up. How do you take your business from being this big into being this big very quickly? And we've done that in lots of different areas.
But when you see businesses like Monzo or Revolut and many of the other financial platforms, some people say, well, they are the future, they're the next generation, and actually a lot of the larger financial services firms represent the past. I mean, do you see that the larger firms have woken up to the potential threat?
I think we woke up a long time ago.
Right, so it's been happening.
Incredibly bright people. I think the issue was how much legacy versus how much new stuff if you have. If you're 80-20 on legacy versus new stuff, or it's hard to succeed. If you're 20% of your stuff is legacy, 80% is new stuff, it's much easier to succeed. And technology now is so cheap, so simple, so easy to use. Many years ago I was a programmer at MIT, useless I might add, but actually programming and coding's never been so easy as it is today, and therefore you can be a startup very readily, but becoming a scale-up, like if I take our DC pension business, it's £83 billion already.
So it's huge.
It's a huge already. Right? We've only been in it a few years, and so the scale we scale up so much easier than everybody else because we have the resources to put in. That's so much bigger.
When you look at a city like London, Asesh, when you look at the proximity of the city to Shoreditch, let's say, in terms of what that gives you, in terms of a culture, in terms of its potential, how might you describe that to us?
So we have offices in London. We also have an office in the US, in Boston as well. We operate across all 50 states in the US. And so,
but what's the difference?
The difference is, so I would say from a London perspective, I think to build in my view, a fintech with the potential to scale, you absolutely do need startup type people, but you also do need a regulator, access to capital. And so I think what London has is a good combination of all of those things. Whereas in the US, that is much more dispersed into different places. But I'd say it's a very, I found as a founding CEO setting up a fintech that actually London has been a pretty good place to start.
The UK is a great place to make this happen. And the only disadvantage we have at the moment versus America is access to capital from the likes of Legal & General, which is much less in the UK. the likelihood of success should be much higher here.
Right.
Not just in fintech, in lots of other
But a lot of people will be watching this say, well, we have much more than just a problem to access to capital. What about the B word? Let's mention it, Brexit. You've said that we need to stop moaning and groaning all the time about it. Is there evidence that our mindset about the future is improving? And to what degree might that actually impact businesses like Asesh?
Oh, we saw Simon Wolfson yesterday talking very openly about, let's get on with things. And we were always in the let's be doers around this. And we've had lots of people leaning in to Brexit. Brexit's shouldn't be a great concern to any of these businesses.
But a lot of people are worried that it actually will have an influence on things like access to capital, on the kind of liquidity in the market.
We had inflows of 60 billion in the first half, and with quite a high proportion of that from Europe. So there's a whole mythology about what is really happening in the real world out there, and therefore the world is awash with money.
Right.
What at the moment we don't have is the money and the ideas linking up very efficiently. That's the bit that we can do here in London.
Very briefly, mythology or fact, problems to do with Brexit, do you think?
So it doesn't appear in my top 5 or 10 things that I worry about today, and so we certainly think about Brexit from our people and where there's an implication. But I guess for us, UK is a big focus, US is a big focus, and we look to Asia next, and so it's not a huge benefactor for us.
And final question, Nigel, to you. I mean, you led the government's mission-led review. I mean, do you think business gets it now that it needs to be a force for good, a force for change, a much more active player in the lives of people? Can we expect the next generation of corporate leaders to be much more fully, I guess, on side with some of the things you're saying?
Absolutely. I'm very positive about the future of Britain. You have the best universities in the world, brilliant entrepreneurs pouring out of these universities. We've just got to get the capital bit fixed, and that's all about just getting the logistics of finance sorted out. And with some of the great people who work in the city, we can really make this happen in the next few years.
Thank you very much, guys. And that's all we've got time for this week. And thanks to my guests, Nigel Wilson and Asesh Sarkar, two proponents of purpose and champions of change. For them, financial inclusion is a problem that can be cracked, and the prize for business is a happier and more productive workforce. And for more on prospering partnerships and those in business who make the difference, join me for the next Capital Conversation. I'll see you then.